If you pay $1,800 a month for health insurance, have you ever asked yourself, where does the money actually go? And let me show you that. And I'm going to show it and I'm going to draw it out so it's painfully simple. So this is you, right? Stick figure, you got a bad hip. And let's say you're a member of the Healthcare Society and you're very happy that you can pay your $1,800 a month in premiums to the insurance company, right? To the big guy. So at the end, you're going to give the insurance company about $21,000 a year before you ever get sick, before you ever go to the ER, before you ever notify them that you might have a bad hip. Now, you actually have a bad hip and you need a hip. And so if you go to the insurance company first, they're going to guide you in their network and they're going to say, great, we can help you. If you say, I already went to my doctor and I already need a new hip replacement, it might be a little different, but in any event, they're going to activate their players. Their players are going to look something like this: the physician, the hospital, the ASC, the anesthesia, the PT, the pharmacy benefit manager, which is the PBM, which controls the medications, the pharmacy, and even the data. They're going to have that entire network in place. Now, here's where it gets interesting. Even after you've paid that $21,000 that year, if you still need the hip replacement, remember you still have a deductible. And let's say it's $6,000. And so now it's $21,000 in premium plus the $6,000 deductible. And then don't forget the co-insurance. That may be somewhere $1,500, $2,000, just depends on the insurance company. Now, if we just accepted all that as normal, which we basically have in our healthcare system, but it wasn't always normal. You should know that. Deductibles have steadily increased over time. Premiums have steadily increased over time, but your access and your experience, not necessarily better for those increases. So money is going to flow from the insurance company that you've paid into to each one of these entities along the way, right? That makes sense, right? Except here's the thing. Let me add something that most people never see. It's this. It's the ownership arrow. Because in many cases, the insurance company is going to own the data, own the pharmacy, own the PBM, own the PT, own the anesthesia, own the hospital or the ASC where the surgeries perform. And sometimes, they own their own rehab, and sometimes they will own the physician. So the money doesn't just go out, it goes right back in. So the insurance company pays one of their entities and they're going to get paid on the backside. The physician and surgeon, I haven't drawn that line all the way to completion because some physicians are not owned by the insurance company. Some physicians are independent. And so that's the big question. So here's the cycle. You pay premium, it goes to insurance. Insurance sends it to a hospital that they own. The hospital profits, the parent company, the insurance company is going to make profit. The premium to the pharmacy. You pay premium, insurance company pays the pharmacy profits, the profits go right back to the insurance company. The premium to an employed physician even. The premium's going to go to the employed physician, their salary is capped, their margin gets retained by the insurance company. So what happens when they don't own the doctor? Like, what happens if the doctor's in private practice? Well, they're going to limit reimbursement. They're going to lower the payment to that doctor because they know something about doctors. Doctors respond to pay cuts by working harder. It's the only industry that does this. All other industries, they would strike, walk out, they would lay off employees before they take a pay cut. Doctors take pay cuts and we respond by working harder, by doing more, by squeezing more into the day. And when more surgeries happen, guess what? Insurance companies collect on both sides, so they don't mind because they're moving money through their system. They already own your premium, and now they can process more volume as they squeeze the physician to do more. So You might think, well, that doesn't really affect me, but it absolutely does. Because when a system rewards volume over value, doctors have less time, care becomes rushed, and burnout increases. Independent practices will disappear, and so your choices are going to shrink. And when your choices shrink, prices don't go down, control just consolidates. So I'm not anti-insurance, I'm anti-opacity. You deserve to understand if you're paying $21,000 a year, why does it still feel like you're fighting for care? You just have to follow the money. It explains more than you think.